Hi everyone, weekly stock market update. Sorry, I am a day late. Now let's have a look at this again. Expenses. This is price earnings ratios. As you know, you're paying $33 in share price for $1 of profits that Microsoft makes, or $106 in share price for $1 of profits Amazon makes, whereas you're only paying $8 to $10 for the likes of Exxon and Chevron in energy. Okay, so it's a good comparison, but there's a lot of stuff which is expensive, is all that it's telling us, and that the market did use that as a bit of an excuse, that and Michael Burry's comments for a bit of an excuse, but it's held fairly steady over the week, and now let's see, well, is it going to go up? Well, valuation isn't going to be the reason if it goes up. It'll more be sentiment and momentum that'll drive it higher. Well, we know valuation won't, because this is price earnings growth ratios. That means the share price relative to growth in profits, and anything above 1 suggests it's expensive, i.e. the share price is more expensive than the rate at which profits are growing. So that isn't going to be the reason it goes up. It's certainly not valuation. And as you can see, the NASDAQ has peaked at about 44% up this year, then dropped to as low as 34% up recently last week, and now is up 36%. So it's recovered somewhat. The S&P up a whopping 14%. Now, some of my students who followed my instructions in January are up near the end of 40%, 50%, one or two who have done really well are up 100% on their pensions, but then that's because they're a bit younger, they take a little bit more risk, they went in more heavily into NASDAQ. Most of the others would really be in a mixture of S&P type stocks and should be up about 20, 25, 30%. That's if they listen to what I said back in January, which of course as good students they do. Now, S&P 500, where are we? This is the drop. It's now at a support. Now, we know you can have downward moves in an upward trend. It happens all the time. Look at that. Look at that. Happens all the time. So the real issue is this temporary, or is it going to continue to that lower point? And really the clues we look for are in momentum, because we know the clues aren't certainly in valuation, because that's already overvalued. We also happen to know that September doesn't tend to be particularly good. So we know we're going into a bit of a storm. Now, this is the weekly MACD, the solid blue line. If that falls and then rises, that's perfectly fine. What really worries us is if this monthly MACD were to fall below its what's called signal line, its own moving average, which is the yellow dotted line. And if it does, then we've seen in the past what tends to happen, and you can see it here, is you get a big sell-off. If it doesn't, and it just sort of kisses it and then moves up, then those falls are temporary and they resume upward. So there's your clue. Okay, these stochastic weekly and monthly tend to be a bit more sensitive to price movements, and you'd expect them to fall and rise in any downturn, but that would just indicate that the downturn is temporary. It wouldn't really tell us whether it's long-term or not. Really what tells us long-term is the monthly MACD, the blue dotted line, that one, and the weekly will just tell us how strong that temporary fall is. Okay, so at the moment, I can't tell. I just can't tell. My inclination is that it's going to continue upwards. But remember, it doesn't necessarily just crash or fly. It could just go sideways for a bit. So watch out for that. I've talked about the FTSE 100 times before. There's the monthly MACD. I've said it'll fall, and I have been right. And there we go. And that's what I'm expecting with that. Okay. Apple. You got some of those falls. It now seems to have stabilized somewhat. As I've said before, September doesn't tend to be a good month either for Apple. Rarely up. Now, you can see this is like the S&P, because the S&P affects the Apple and Apple affects the S&P. It's not below that dotted line, so momentum hasn't collapsed on the monthly. And you can see how this has already gone up here, and we should expect some upward moves. That's the weekly, which tends to be a bit more sensitive to prices. This is the monthly stochastic, which is a little bit less sensitive. And what we really want to happen is this: just get out of the way, and then just, basically, when you're going to have your sell-off and then bugger off, if you see what I mean. So have we hit the base here? I can't guarantee it, but what I would say is it looks promising, and if you're risk-loving, you'd stay in. If you're risk-averse, you'd wait. It's as simple as that. The only thing you can control is your risk appetite. You can't control the prices. And you certainly don't want to be gambling on what might happen. This is what the analysts think. The average analyst price is 199 for Apple. It's currently 177. They think there's another 12%. The high price is 240. That doesn't really matter because analysts tend to be over-optimistic. But my point is, you'd look to see if you're risk-averse, then you'd wait. If you're risk-loving, then you'd continue holding. And for somebody like me, on the investment side, I'd hold, but on trading, I may well take a hedge or I might go short, but that's trading. Different hat, different set of circumstances, okay? An investor doesn't trade. So an investor with their investments and their investment hat would either have a choice of selling some, basically from 10 to 100%. The more risk averse they are. The more risk averse they are, they'd sell 100%. The less risk averse, they'd sell 10%. And they might even say, look, if it drops 10% from the peak it's been, I'll sell half. And if it drops another 10%, I'll sell another half. But if they're a longer term holder, such as I am, they'll say, well, I'll wait it through. I can see it's a bit ugly and it's going to fall for a bit, but I'll just wait and hold it. And they don't want to be trading their investments. Okay, understood? So that's why and how we sometimes take the pain of falls, even though we know those falls are going to happen. So take Alphabet. Still think the analysts think it's got a lot of upside. And you can see, as again with Microsoft, a bit of a base here. And we should get something like that, but they can't be guaranteed. You can see the weekly has fallen, and this will be a bit of a leader. And you can see before where the weekly falls. Now, if the monthly MACD falls at the same time, it's a bigger drop. If it doesn't, and just the weekly falls, like has happened here, but this just does this, and it feels a bit like that period, then those falls are temporary and you recover them. Got it? It's as simple as that. It's either going to be this kind of time frame or we're here. That's all we're ever trying to work out with any market falls. And I try and make these videos educational for you. We're either trying to work out, is it temporary or is it more permanent? And if it's more permanent, we go into cash. And at the moment, I don't have enough data to say that is definitely the case. Now, if you traded your investments, you might hedge this, or as I said, you might go short. But if you, like most people, don't trade your investments, then you simply hold on. And as I said, you might sell 10% and get back in. Or you might say, listen, I don't have that kind of time. I'm just holding on. I can say it happens. I'm not worried about these short-term movements. As Warren Buffett says, if you watch the markets every day, you'll get mental, right? But this is just educational to show you what's going on and how to interpret it. And the analysts certainly think that. Now, Amazon, similar story. They're all obviously going to be similar because prices can only do, two things, go up or go down, right? So that's sideways, and we expect that to happen. We expect this to continue falling. It might not fall too much before it rises. And you've seen it do it before. You could look at these periods and say, oh, is it one of those where the drops have now happened and it'll continue up? Or is it going to be maybe closer to something like this, where best case, it just goes sideways? So that's all we're looking at. Pattern recognition. Return potential 25%, say the analysts on this one. Disney, what a letdown, but I'm keeping it in here because it's very educational to show, look, all those analysts thought it would go up. We thought it would go up from here. We thought it would do that, but we're having to wait. Now, sometimes these take longer. That's why we hold things for 12 months and not for 12 minutes, okay? And there's Disney, and the analysts think 28% to the upside. Doesn't mean they're right. Now, Nvidia had a good set of earnings. There you go. And now that's going to be overbought. It's going to stay overbought for a while. So if you're risk loving, you hold on to it. If you're risk averse, you take your profits. You say, look, I've done rather well. Or somewhere in between. If you're sort of half and half, you might say, well, if it drops 10% from the highest it's been, I'll sell half of it. If it drops 20%, I'll sell all of it. Or you work it out. You create a matrix. You say size of drop, how much I'll sell. Okay, that's how you keep your appetite. But that means a lot of time involvement. So if you want to reduce the time involvement, you might as well just look at it every fortnight. And as long as it's not dropped 25% from the highest it's been since I bought it, I'll keep hold of it. Okay, those people who think suddenly they're going to create lots more time watching the markets, they're not. So minimum every fortnight, but look at my weekly updates on Telegram. Have a look at alpeshpatel.com/links. And if you're not already part of the Great Investments Program, you better be. alpeshpatel.com/shares. Is what you want for that. Now, Tesla on that support line, and we're expecting it to go back up. However, we keep a close eye on the monthly and the weekly MACDs, as I've already described to you. And don't forget, September and October are dreadful for Tesla, usually. So don't be surprised if this just goes nowhere for another couple of months. And the analysts aren't particularly optimistic. So again, if your risk, this is how you develop your risk appetite. You might look at that and say, do you know what, Alpesh, I think I've had a good run since you told me in January it was your special situation. I think I'll just take half the profits now, or I'll take half if it drops 10%, and so on. And you work that out based on your risk appetite. I could tell you exactly what you should do, but I'd only be able to tell you in hindsight, and that's useless because I can't guarantee the future and I can't see in a crystal ball. Meta, that's where that is. Okay, so we're off a bit, and you can see similar kind of analysis. Weekly is all the way is what we're hearing, but look, that's nowhere near falling, and therefore I anticipate that this is, and this is the clue. I think Meta is going to give us the clue for the rest of the market. What's going to happen is you're going to get these falls, but they're not going to be like this. They're not. They're going to be more like this. Okay, and the reason I say that is just look at that distance between the MACD and its own signal line. It's so big, which gives the weekly ample time to go down and then go back up because it moves in a wave. And when it goes down and back up, this should, then the monthly should resume upwards, which means it'll have got the falls out of its system and then started going up. And I think that's the advance warning clue that we're not going to have deep falls, and Michael Burry's wrong. Okay, he'll make enough money. Okay, September's not a good month. Now, that's not guaranteed. This could easily just fall, and this could do, anything can happen in the market. Anything can happen, but I suspect we're looking at the moment at something which is closer to this, And that's really educational for you because now you can understand and interpret the markets better than you otherwise could. They also think, the analysts think it's going to go up 26%. So there you go. ServiceNow, one of mine. It's had its falls. I'm not going to repeat myself on all of these. Okay, you can have a look at all of this, can't you? And you can see it. And you'll notice how similar all the prices are. So much for diversification. Diversification is very difficult in a market. Okay, now campaign to teach 1 million people how to become millionaires. Basically, I want to teach 1 million people to make 1 million through investments across their lifetimes, and that's what the campaign for 1 million is. If you haven't joined the Great Investments Program, have a look at alpeshpatel.com/shares. Thank you all very much. I hope you found this instructive. Don't forget my Telegram channel. Thank you.